Alrighty, I'm here with my good friend Pete Fournier, and he is a very well-known expert in the industry, and he focuses on life insurance, final expense, Medicare, and also annuities and long-term care. A lot of people don't know him quite yet for the big annuity distribution, but he's very well versed in annuities and does quite a bit of volume, and he's massively scaling and growing his practice in annuities. And very similar to my background, where I started off selling mortgage protection and final expense. And then I slowly started getting more into the bigger asset plays like long-term care and then annuities. And I quickly realized, wow, I rolled over $1 million annuity one time. And I was like, I was able to earn close to $50,000 in commissions because it was a shorter term policy. And I thought to myself, okay, I was able to help the client out, better their situation. I didn't charge them. I got paid directly from the insurance company. And if I were to make 50 grand, how many final expense applications would I have to write to make 50,000? All those numbers started going through my head. I was like, wow, there's an amazing opportunity to help this wave of retirees with annuities. It's not for everyone, but for a lot of clients, it's a good diversification tool. And so I started focusing more full time on that. And then Pete has also. And so today he's going to break down a little bit about how he actually started, and then what his transitioning point was into annuities and what he's doing now to write the volume that he's writing. So Pete, take it away.
What's up, Roy? Thanks for having me on, my man. So similar to you, I started at two captives, but once I got to the independent side in 2012, I was 100% MP myself. And even though your average deal size is maybe $150 a month, to your point, I remember my best week ever in like 2013 was like 37.7. I think I wrote like 41 apps when I was still only like 80% comp, right? So in the grand scheme of things, that's one solid annuity contract. So it is wild, the commissions that are possible. But in terms of transition, over the course of time, I went from mortgage protection to more group benefits, started in the Medicare space like four and a half years ago. I own All Things Insurance Group, so privy to the name, we should do all things. So started heavily diving into annuities probably like 2.5, 3 years ago. And it's been a game changer, obviously from an income perspective. But to your point, you're doing a lot to help that retiree, and way more so arguably than even your MedSup, your MAPD, your final expense policy, et cetera, because you're preserving what they worked all their life for some of these people for, right? Which is,
that's what's really cool about it. I mean, you're able to take somebody's entire life savings and say, okay, look, you've climbed this mountain. Now, how are you going to actually come down from the mountain and make sure it actually lasts? And again, there's nothing wrong with having diversification. I know that you're going into becoming your own RIA to help people with the other side of the fence. And that's very good, because this industry is so divided oftentimes, where you have a guy that's all about safe money, then you have a guy that's all about assets under management. Well, there's a place for each of them, and there should be a combination of the two depending on the portfolio size, where clients can have the opportunity to maintain their liquidity and have the upside potential of the market with understanding of the risk on the downside, while having a safe little bucket to help protect the rest of it. Just this morning, I was with a client, and I said, if you were 30 years old, we probably wouldn't need to diversify because you have one thing on your side. I go, you know what that is? She goes, no, what's that? I go, time. I said, now you're 68. If we go through a massive recession, do you have the ability to wait a potential 10 years for it to all come back? She goes, well, no. I go, but also if we go through another booming market like we're experiencing now, you don't want to lose out on all that opportunity, do you? She goes, well, no. I go, what if you could have the best of both, where you could still benefit from this upside, but have a protection on the other side of the fence? And she goes, I like that. And that's what a lot of the training on this annuityproducers.com podcast and video series we do, is to help agents understand that don't be over aggressive with annuities. You just balance people out. Like the average assets that we reallocate is only 40%. And as an agency, we're doing a couple $100 million now a year. And if you think about all that leftover money, that's a lot of leftover money. But that's just where, if you want to get involved in the practice, you go out and get your securities license, you become an RIA, you can help the clients manage that money, create additional revenue for yourself, but then they have one single spot to go park everything there. And it helps you with the client perception, because some clients want it all in one, or they say, well, you're not a financial advisor, you're just an insurance salesman. It's like, okay, if you don't have a securities license, you are not a financial advisor. You are an insurance salesman. I haven't personally reached out and got my Series 65. I've contemplated it multiple times. I focus on the asset protection side solely, but there's a huge opportunity for that. So maybe you can share a little bit about how are you opening the door in your conversations to get these annuity sales that you're getting?
Yeah, so anytime I learn something new, the easiest way, and I would advise everybody to do this, is go after your own client base first. Like everybody's running around, you get asked 9,700 times a day probably because I saw it at Medicare Con. I get asked all the times like, okay, I learned how to write an IUL or I learned how to write an FIA. What leads do I get? And you're like, how many clients do you have? They're like 500. And you're like, there you go. So we went after our existing book initially. Our key was MedSup clients, first and foremost. You knew they had money. They were savvy, relatively speaking. They could afford it. They probably had a 401k retirement plan. If you did their Part B, you know how big their IRMA was. So if they made that much money, they probably have retirement assets along the way.
Right.
And all we were doing was calling them up and saying, hey, are you happy with your Medicare supplement, your Plan G, your Plan N? You happy with your PDP? Great. Hey, we'll look at that during your anniversary date or during AEP. But just real quick, because obviously our economy is not doing so great. So fixed rates are pretty high right now. Do you have anything? I know we did your life insurance, but do you guys have anything that acts like life insurance, meaning it would get passed to a beneficiary, like stocks, bonds, mutual funds, 401ks, cash under the mattress, or like buried in my backyard like my Uncle Louis used to do? And they'll immediately tell you, like, yeah, I got this pension or I got this 401k, I got an IRA, it's just sitting there, it's whatever. And we just came out with a line, depending on the interest rates that were at the time, of, hey, if we could show you a way to preserve that money, anywhere from 4 to 9%, let's say, fixed guaranteed, would you entertain a conversation? And most of the time, they're like, yeah, sure. And to Roy's point, it's not about going like, we had people come into the office even here, 800 grand in their 401k, and the person that brought them in is like drooling. You're not taking the whole thing 9 times out of 10, right? But preserving a portion of it and showing them what they can do with it, either as a short-term savings play, a long-term legacy play, or as an income play. I mean, most of the people are baffled. And the antithesis of that too is so many people came in with a bad taste of annuities in their mouth. They're like, oh, I heard they're bad. And we just asked them, what'd you hear? And they're like, well, I don't know, nothing. I just heard they're bad, right? So when you show them the illustration, you show them the presentation, you go through a fact finder with them. Yeah. I mean, we haven't done as much as Roy in terms of volume, but our closing rate's like 80%. Like it's a no-brainer for 8 out of 10 of these people. So you just got to ask. So we started that. We did probably 4 or 5 million real quick on the client base side. And now we're doing more of a lead gen and an investment perspective. So we're going to start doing financial seminars twice a month, as well as the Medicare seminars that we're doing already twice a month. So big lead expense. As you know, Roy, seminars are not cheap. You might be spending 10, 15, 20 grand a month. But if you got 4 seminars, all of which could be cross-sell Medicare annuities, that's 120 prospects. Yep. I'd pay $150 a lead all day long. So yeah, that's definitely the play going forward. And you know what? If you're an agency man, I was talking to a group at Medicare Con about this too. If you're the leader and you're not necessarily the most savvy or polished, or you're scared of presenting, get someone else in your agency to do it. But make sure you're doing something in person, face to face, or at least a webinar, because you come across as the thought leader for sure. And you'll get plate lickers, but who cares?
100%. That's what I tell people all the time. Like, they're like, well, I don't want to do a seminar because I get plate lickers. I say, well, then do an educational seminar. That's fine too. It doesn't matter. But even if you do dinner seminars, educational, there's people that will go to these workshops because they have absolutely nothing else to do and they're hoping for free snacks. That's okay. It's a part of it. And your average lead cost for the lead for these workshops is going to be $150 to maybe even $250 a head. But to your point, it's totally worth investing 10, 15, even 20,000 a month, as long as you're getting a 3 to 4x on that in return. And you may not appreciate it right away, but look at the lifetime value, especially people selling Medicare. I mean, you get that residual income base, and some carriers, they pay indefinitely. So there's a huge opportunity there. And I was just on a call earlier today with another agent trying to help them get into the annuity space. And a lot of these agents think it's overly complicated. They could never do it. In all reality, it's relatively simple. You either purchase it for a fixed rate, like a MIGA, that's easy to explain. You buy it for income, okay, lifetime income, how complicated is that? Or you buy it for potential growth. And then you just have to have the conversation about the timeframes. And you don't have to go out there and buy a bunch of leads or spend $10,000, $15,000 a month if you don't want to, if you already have a pre-existing book. I mean, how difficult is it? I love what you say. I say the same thing. What do you have that can act like life insurance? What do you have that can act like long-term care? You are automatically discovering assets without being direct with it. You're indirectly discovering those. You help them with the first point of either Medicare or life insurance, and you say, oh, hey, by the way, you mentioned these other assets. How are they positioned? Have you heard about these other opportunities? And there you go. I did a big MIGA rollover 2 days ago with a client, and I showed them the MIGA rates because they wanted short term. They did not need income. They didn't want to lock anything up long term. They were very clear and adamant about the money positioning of short term. And I showed them everything, but they said, I like the short term flexibility. I go, great. Have you seen what kind of rates are available? They go, well, no, I'm getting 5% now. I go, where at? They go, my money market. I go, great, that can change tomorrow. They go, yes, but it's still 5%. I go, what if there's a way to get 6 with no risk or no fees, and you could touch your interest if you wanted to? They go, well, where's that at? I never heard of that. They go, yeah, the reason why, because there's no fees in it. And these big brokerage companies don't promote these plans, and we help show them that plan. Now, again, if you're in Medicare, all you got to simply say is, hey, let me tell you about what Medicare doesn't cover. Look at these costs. How are you going to help pay for these costs? What if there's a way to take pre-existing assets that could help pay for either your supplement, your Part B, or any other ancillary lines that's on a guaranteed basis? Well, how do we do that? Well, let me show you. That's an income annuity. So it's really not that difficult. Just agents, they feel overwhelmed and they complicate things when they really don't need to, especially with fixed annuities. There's very little moving parts. I mean, a lot of people think, oh, there's an income rider, there's a fee, there's an income account value. It's not that difficult. Anybody that has a middle school education can just call the insurance company and say, explain how this rider works, explain how the index crediting works, explain how the surrender schedule works. And you'd be able to fully understand it within 20 to 30 minutes. That's it. And if you come across situations where you're not sure about the transfer, rollover, or tax code, that's where you can still collect the application with the client, and then you call the carrier or call your upline or your partner. Like you can call Pete, call me, and then we'll help walk you through on how to do that. So yeah, I mean, a lot of agents, we talk about this all the time. They don't invest into their own practice, which sucks, but they're just cheap, and that's what happens. But, you know, I also wanted to give you credit, Pete, on your academy. As everyone knows, we have our own training academy for annuities and asset-based LTC, but Pete has a phenomenal one on the life insurance process, final expense, and Medicare. And even if you feel that you're sufficient in those fields, you should still take a look at this academy and the training, because you pick up on gold nuggets. Like, I'm a part of Pete's program, he's a part of mine, and we're one of the thought leaders in the industry, but you can never stop learning. So a lot of agents also get this sense of pride and ego where they don't invest in themselves in education because they feel that they have it all figured out. Well, none of us do, because both you and I and everybody listening, we know another agent that's doing way more than us, right? So that's who I want to listen to. I want to listen to the guy that's doing way more and how he did that.
Yeah, I can't ever be too prideful until I'm making hundreds of millions of dollars. And then there's always a bigger fish anyway. But I know, to your point too, like I probably spent last year alone $80,000 in personal development. Like, I don't know everything there is to know. I'm good, but I'm continuously learning. So definitely invest in yourself from a course perspective, from a webinar perspective, from a learning perspective, and like use the damn thing. If you invest in Roy's course or myself or anybody else's, like, you have to log into that shit habitually, because if you don't, it's going to go one ear and out the other instantaneously.
It blows me away. We have people that'll buy like a coaching package for $3,000-$4,000. I never hear from them. And I'll even I feel bad. I'm like, let me call you. Hey, look, oh yeah, I'm just not ready yet. Okay. That was like 4 years ago. And then we have people that they'll sign up on the monthly, and then I check on Lightspeed. They've never logged in. I'm like, you guys are paying for it. Use it, and we get ambitious about buying courses, and I'm guilty of this too. I'll buy like speaking courses, and then I won't ever log in and do it. And I'm like, okay, I got to do this. I'm telling people that, the pot calling the kettle black, or whatever that saying is. but you have to invest in yourself. And like last year, I think I spent like 50 grand on personal development stuff, like even like meditation, all workout stuff, like, 'cause that's all on how to do it, how to structure a business. Because, a lot of us insurance guys, we don't know how to actually run a sufficient business. We know how to sell, but how do you run a business? It's a whole other learning curve.
Mm-hmm.
So
100%. You can't know everything. It's impossible.
no, not at all. So yeah, Pete, I really appreciate your time today. It's always fun. We like to interview all the top agents around the country, and you are definitely one of them. And if anybody wants more information, he pretty much dominates Google with his name, and it's Fournier, right? Is that how you say it?
Yeah.
Fournier. Okay, I can't spell or enunciate names correctly, but you just Google his name in. You can check out his Sling It course. We're a part of it. It's amazing. If you have questions, he's based in North Carolina. He's got a phenomenal lead program for agents out there. If you're selling Medicare, final expense, life insurance, you definitely have to check him out. We really appreciate you being on, Pete, and we'll see you guys the next time.
Thanks, bro. Great having. I appreciate it.
No problem at all, bud. We'll talk to you soon.
Take it easy.
All right, bye.